Welcome to the Investors Trading Academy event of the week. Each week our staff of analysts and educators tries to provide you a better understanding of a major market event scheduled soon, and that will have an effect on the global markets. US earnings season 2016 is getting underway, with Alcoa and the US banks taking their traditional place at the head of the parade. The Alcoa report typically gets the credit for kick-starting each earnings cycle. Alcoa reports after the close on Monday, January the 11th. Overall, we have 12 index members reporting Q4 results next week, which includes JP Morgan, Wells Fargo, Citigroup, Intel and others. The S&P 500 earnings in Q4 are expected to be down minus 7.4% for the same period last. Investors don't have high expectations. According to S&P Capital IQ, fourth quarter S&P 500 earnings are projected to decline 5.2%, with estimates regularly being wound back. 6 out of 10 sectors are expected to report year-on-year earnings declines for the fourth quarter. The energy sector will depress US fourth quarter earnings and subdue growth for the entire S&P 500, making 2015 the weakest year for earnings since 2008, Goldman Sachs said Friday. The bank trimmed its S&P 500 earnings per share estimates for 2015, 2016 and 2017 in a note that highlighted 3 factors it expects to feature in earnings releases and on conference calls this year. If it weren't for the energy sector, however, the S&P 500's chance of turning a corner and returning to growth would be better. Excluding the sector, earnings are expected to grow 0.6%. Of course, it still isn't much, but it would be an improvement for the index over the third quarter. However, we should still keep in mind that the historic average for the index is quarterly earnings growth of 8%. The third quarter marked the first year-over-year earnings decline since 2009, although it didn't end up being as bad as was expected at the beginning of October. And if the fourth quarter also brings a decline in earnings, it'll be the first time the index has seen consecutive quarterly earnings declines since 2009. Wall Street is currently estimating a 1.4% revenue decline for the fourth quarter, with healthcare and telecommunications being the worst offenders. US stocks finished last year on a somber note, with both the Dow Jones and the S&P 500 snapping multi-year winning streaks. Only the Nasdaq escaped the year unscathed, turning in a 5.7 gain on the year. Apple Inc. is expected to report earnings on January the 26th after market close. The report will be for the fiscal quarter ending December 2015. According to Zacks Investment Research, the consensus EPS forecast for the quarter is $3.26. Alphabet Inc., the new name for Google, is expected to report earnings on February the 4th.